Hi everybody and welcome to Funding a Better Future. This is a series of bite-sized episodes which feature the expert insights of climate tech investors. My name's Cherry and I'm the founder of Above and Beyond Recruitment. We're a business that partners with climate tech startups and we help them to scale and grow their teams, either by recruiting for them and helping them build out teams or by offering talent advisory and consultancy services. This series is aimed at founders and leaders of climate tech businesses, and particularly to anybody who is looking to raise investment this year. Throughout the course of the series, we aim to give you a realistic picture of the current investment market, as well as some tips to help give you the best chances of fundraising success, and hopefully to give you a network of people that you can reach out to when the time is right for you. Today, I'm joined by Irena Spazzapan, Managing Partner at Systemiq Capital. Irena was an executive director at Goldman Sachs, focused on gas and carbon, before joining Systemiq, a climate advisory firm where she was responsible for building out an investment arm, investing in startups across clean energy, the circular economy, and natural solutions. In June of last year, Systemiq Capital spun out from Systemiq and now operates as a separate entity. And I've only spoken throughout this series, I think this is my seventh episode of the series so far, and so far only spoken to men. So it's absolutely brilliant to feature a female, not just in climate tech, in the climate tech community, but also in the investment community. So Irena, thank you so much for joining me today.
Thank you so much for hosting me. Look forward to the conversation.
Fabulous. So to kick off, are you happy to share a little bit about your journey into the sector and Systemiq Capital's journey since you launched the investment arm 5 years ago?
Sure. So I like to say that I started working in climate in March 2005, which was 2 months after phase 1 EUA ETS scheme was launched. So I sort of lived through that boom and bust on the commodity side of Goldman Sachs, where I was doing power and carbon mainly and gas. So having had a career which was very much linked to physical assets, right? And what are the feedstock and what are the that sort of you need to generate power and what are then the offtake agreements and how you finance that whole thing. Was definitely very sort of a great start to understanding how the actual physical world actually works and how things move around and what are the kind of things that you can finance and what are the things you cannot finance. My then journey to sort of specialize on climate only came via children. I think when you have children, it becomes much more about the world you leave behind as opposed to, what's going to happen in the next 12 months. And that was around the time when I decided to sort of leave Goldman behind and very much focus only on the sort of innovation and clean tech side of things. Yeah. Clean tech, as we knew it back in 2000, sort of in the 2000s, had a complete burial right after the great financial crisis. So in 2000, I would say that 2011, 2016, there was a very deep winter in anything that had links to the clean tech world 1.0. And 2016, 15, 16, and then 17 even more so is when it became clear that the cost curves of power were following a very steep downward curve and were going to be much cheaper than any other alternative, much sooner than anybody had thought about. And that, I think, was what drove, as we now know it, ClimateTech, which I'm sure is going to change name at some point again in the next 10 years. But it is now linked, and unlike sort of clean tech 1.0, it's very much linked to cost curves that are finally cost competitive. So it's not linked anymore to something, again, most of it, not everything, is not linked anymore to things that are way off market, right? And way more expensive than the alternative, which is why we think, right, that it's going to be driving one of the biggest industrial revolutions that we have seen possibly since we moved from coal to oil, right, earlier in the last century. So it's a incredibly fascinating transition, which is happening faster than any time in history because of the climate urgency we're living.
Yeah, amazing. And so obviously you've been in this space then, as you said, then since 2005 in one mode or another. So that's sort of almost coming on for 20 years. seeing booms, busts, and the growth and the evolution of this sector. So as it stands today in the kind of climate tech sector, what's your opinion of climate tech today, the opportunities and indeed the funding landscape this year for climate tech companies?
So it's more exciting than it's ever been. It's definitely very exciting being an investor in 2023 and 24 than being a founder because of the macroeconomic environment we're living in. But, and there will be bubbles that will burst within the climate world, and to an extent have already, or we're living through that. But the space as a whole is not going to go back to where it was, in 2011, because it becomes so much bigger and because it's based on cost competitive alternatives, which wasn't really ever the case before. So it's an incredibly exciting moment, though cheap money has ended. I think 2019 was when we started seeing the boom in climate tech, right? 19, 20, 21. And then we lagged in climate, we lagged the rest of the tech industry by at least 9 months, especially in the US, possibly Europe sort of got there a little bit earlier. So it's going to take at least another 4 or 5 years to understand, what the real returns are going to be from the funds that were invested in 19, 20, 21, 22, in sort of in the boom years, especially 21, 22. Lots of things will change in the meantime. And I think, again, when you run a fund, you always have to consider that your time horizon is over 10 years, which is longer than any financial cycle. So you have to be very careful at avoiding momentum investments that, just because something is hot, I'm going to then invest in it too. Those are exactly the kind of investment you should not touch. And if you're a founder in this environment, right, it goes by itself. I occasionally speak to people who are like, I want to found a company. Do you have an idea? Good luck. Right? I think just like, as an investor, you don't want to touch things that are hot or in a momentum hype. So as a founder, you have to go and look for things that are maybe a little bit under the radar, right? Things that, again, where the cost curves are coming to a stage together with the regulatory pressures or whatever else it might be, right? They're coming to a stage where you believe as a founder that your particular space of interest is going to boom. You have a passion for it, because passion is always part of the equation. And go for it, right? Don't go and chase the stuff that is now fashionable, because chances are that by the time you're going to come and raise, your seed or Series A fund in 2-3 years' time, if you follow the hype in 2-3 years, that cycle is going to deflate, and you're going to be raising in the worst possible cycle.
Yeah, absolutely. And you mentioned there about there being some parts of the sector where the bubble has already burst. I mean, in your opinion, what are those parts of the sector that are kind of less hot now, I would say?
Well, there's many, to be fair. Maybe carbon offsets, right? The traditional world of carbon offsets is definitely a bubble that is deflating very fast. And it's deflating in the right way. I am a strong believer that, if you follow the various research, that 80 to 90% of offsets ever issued have had zero additionality, right? A lot of that sort of paper cowboy carbon trading is disappearing, right? And that always disappears through a downturn. Again, in 2009, 10, 11, after the great financial crisis, you had the CR soup. You had gray CRs, green CRs, and you name it. And that whole thing disappeared because as it got more and more fragmented, the market had no more liquidity to operate. So carbon markets today are going through a similar cycle. But I'm equally, after 5 years, for the first time, a little bit more bullish on that side, because what is going to emerge out of the ashes is actually way stronger from a quality perspective than we've ever had before. Another area which went through, its massive hype was the famous world of carbon accounting. Valuations for very small revenues. And, there's a very big role for those companies to play in the world, but not to the extent, the valuations were crazy, right? So it's going through its own readjustment period. Possibly we are entering the same on hydrogen, right? Where maybe at the tip, I think things are going to go in a particular way. But let's see, right? It's still now being pumped up by subsidies. But I think if you make an investment based on subsidies in venture capital, when the times are so long, good luck, right? Because the subsidies will be over way before your fund is going to come to the end of the term. There are others smaller, right? Maybe these are the three big ones. Food, to an extent, went through a massive hype, so there's a bit of a readjustment right now.
Yeah.
But there's equally lots of very exciting areas out there. And I think as a founder, you have to be very conscious of the sector you operate in.
Yeah. And on that side, on the kind of the bits that are kind of exciting and those ones that haven't kind of reached the top of the curve yet, what are you seeing as up and coming, as exciting and as interesting in the space this year?
So we've been excited about biodiversity for a long time. We made a couple of investments in that space. We believe that that's not yet up and coming as an area of investment, but it will become an asset class on its own as we sort of start understanding the smaller blocks of nature, right? And how those can contribute to better understanding of your nature impact, but also founding blocks of the sort of bioeconomy of the future. So that's a space we've made a few investments, continue to be excited about. Shipping is an interesting space. The IMO, the International Maritime Organization, is going through some pretty steep reforms, right, in the next 3-4 years. And there are some very interesting enablers that are emerging in that space. Again, we've made an investment. We're looking certainly to deploy more in that space.
And is that around the decarbonization of shipping and of the ships themselves? Yeah.
Yes, 100%. A lot of these spaces, and aviation falls in the same track. They are going in a world of much increased complexity, right? As opposed to, I run my ship and I can just stop in any bunkering port in the world and fill it with lower high sulfur fuel oil. You're going into a world, well, a short route might be electric, a longer one might go on ammonia. Like some might stay on these sort of scrubbers and lower sulfur fuels. Others might go on hydrogen, you name it. It's going to go into much bigger complexity, which is usually a space that starts screaming for enablers. So it's something we find very interesting. The whole electrification in transport theme, we've done a lot of investments in. We're going to continue investing. There are still big bottlenecks in that space. And so we believe that there's still massive value that has to be created. And a lot of that will come from technology, sort of tech innovators. Another space we've always felt, right, we haven't made a single investment, but is the space, it's personally my personal, right, sort of a hobby, right, in a way, it's the space of methane, right? It's just an enormous problem, massively overlooked because everybody focuses on CO2. But the real sort of scary negative feedback out there is methane, right? And the fact that methane leaks don't even occur in the way we account for the carbon budget. And methane, yes, it disappears on average after 15 years, but in those 15 years, it is 100 times more powerful than CO2. So it's a massive problem in the global warming problem. Not enough solutions out there. We've seen many, right? Nothing so far that was really, really investable. But we'll keep looking.
Yeah, interesting, fantastic. Okay, and what advice would you give? I mean, before we kind of launch into that, perhaps talk to me a little bit about. You mentioned the sectors that you're interested in investing in, but from an organization perspective, a startup perspective, what stage of the journey does Systemiq Capital tend to invest at, and what does a good investment prospect look like for you?
So we do Series A, B. So we don't come into the earliest stages of the process. You need to have a minimum viable product. You need to have some revenues. We very, very rarely invest in pre-revenue companies. We are most excited about businesses that have a sort of a high level of IP that don't require much CapEx to scale, right? So yes, we will do some sort of deep tech CapEx heavy companies. We will do a few sort of pure SaaS businesses, but those are maybe not the ones we are most excited about. We, again, in all the areas, whether it's food or materials, nature, mobility, there is a lot of sort of deep tech innovation required, which can play much more sort of on the computing power that is increasing every year, right? And how does that enable a faster transition of the underlying sectors? Those are the spaces we are typically most interested about. There might be a bit of a hardware component here and there, but not something that will require hundreds of millions, right, of CapEx to get to even revenues.
Okay, so more those kind of tech-enabled solutions, and perhaps even examples of where AI is decarbonizing sectors, and
those kind of have, and that's the way we've been investing for the past 5 years. So it's nothing new.
Yeah, perfect. Okay. And what advice would you give to founders in organizations at that point that are looking for investment and who may be coming to speak to you? What advice would you give to founders in those organizations about perhaps where they could be focusing within their business to make them as attractive an investment prospect as possible?
Yeah. So because we're going to be living in a world of high interest rates for a while, right? And you can park your money in a bank and get 5%, or you will soon get 5%. There is a lot more, I think a lot more general apprehension towards businesses that are many years away from revenues, because the cost of capital for those kind of businesses is much higher, right, than it's been in our living memory, right? None of us has ever worked in an environment where you had interest rates above 5%. So I think businesses that are so far away, if you are sort of a deep tech asset heavy business, which will rely on having somebody that's going to finance your first of a kind and your assets, maybe look, there will be some venture capital invest funds that will invest in that kind of stuff. But that is not really venture capital, that is infrastructure, right? And so if you want to be VC funded, and then at one point in your journey, you're not going to become an infrastructure investment, that link doesn't really work. And I think that's been missed a little bit, right? Confused a little bit in the past sort of 2-3 years of boom. So look for investors that understand your asset class, that are not investing into climate just because it's hot and because they believe that they have to tick a box of some LPs who is telling them, that they have to have some climate exposure. Because, in a way, an early stage investor, it's a bit like a marriage, right? You're going to be together for a very long time, right? These are not people who are going to just sit in a back room, but you want them to be very actively helping to scale your business. And so it's very, very important to be very thoughtful about who are you going to let in. Assuming that you have the choice, you want to be super thoughtful about that, because it does make a massive difference.
Yeah. And on that point, if you're I should imagine if you're a first-time founder, or if you're a founder who's raising external capital for the first time, you may not know, I suppose, how to ask the right questions or how to determine what the right investor is going to be.
That's why the incubators are formed for, right? That's why you need advisors, right? Yeah. This is not a world where you're going to, create an amazing company on your own. This is a world of deep collaborations where people, especially in climate, which is a system problem, people are typically incredibly open to help, right? Yeah. And all the investors I know, all the people that are involved in climate dedicate a chunk of their time to help the next generation come up, right? Because it is so critical. So use all channels you have. I always tell people, you will know 2 people that have something to do in what you're trying to do. Go and have coffee with those 2, ask each of them for 2 more. And in 6 months, you're going to know 100, right? But nothing happens just sitting in front of your desktop, right? You sort of have to reach out there and hustle. That's the job of a founder.
Absolutely. And have you got any kind of advice on what questions they could perhaps ask when they're having initial conversations with investors to ensure that investor really does know their asset class, really does understand what they're trying to achieve and would be the best fit for them?
Well, that's usually very clear, right? If I go in a founder conversation and after 10 minutes, I know more than the founder, that's not a good conversation I want to be in, right? So you want to feel that the investor knows a lot about what you are trying to do, but not nowhere near as much as you, right? Because the investor should never know more than the founder.
Fair enough. And what are you excited about this year for Systemiq Capital? And is there anything exciting happening in your world this year that you'd like to share with us?
Yeah, look, it's we are closing our second fund in June, so I'm really looking forward to closing a year of fundraising for on our funds. So I've had a fun year of sitting on both sides of the bench, and I think overall this is one of the most exciting periods to invest in VC, right? That we've seen in the past 10 years. So it's a very, very exciting time.
Fantastic. Yes, I know. It definitely feels like it is. I think it's an exciting time, but one that at least on the founder side and where I'm speaking to people day in, day out is kind of tinged with slight apprehension and slight uncertainty about what's to come. But all of these conversations I've had over the last few weeks with various investors across the climate tech sector have all been very positive. There's a lot of optimism. There's a lot of appetite to invest. So yeah, it's definitely going to be exciting to see how the next couple of years progress for sure.
100%.
So, yeah.
No doubt.
Yeah, Irena, how can people get in touch with you or Systemiq Capital more generally if they would like to start conversations about investment?
So we have a website, systemiqcapital.earth. You can see the rest of the team. I think the website does a reasonably good job of explaining sort of who is doing what in the team. It's 9 of us, so it's a larger team. Or just reached out on LinkedIn, or there might be some contacts on the website where it might be, but LinkedIn is always the easiest.
Fantastic. That's great. Well, thank you so much for joining me today. Thank you so much for sort of sharing all of that information. There's a lot of value in there for founders who are watching. So yeah, really appreciate your time.
No problem. Have a good day.
You too. And to everyone out there, if you've missed any of our previous episodes, we've spoken to some fantastic investors, including Turquoise International, Nesta, Nomia, Planet A Ventures, and many, many more. And we've got more episodes coming over the next 2 to 3 weeks. We won't be with you this Friday, unfortunately, but we'll be back with you next Wednesday when we'll be speaking with Albion VC. So thanks again to Irena, and thank you to everybody who's joined us to watch today. Have a great rest of the week.
Thank you. Bye-bye.
Bye.